Well, thanks everybody for coming. So I guess what I'm going to talk about today, and I'll be happy to take questions on whatever's on your mind, is the whole concept of Keynesianism and how that theory is really responsible for the problems that we have, not only in America, but pretty much all around the world. It's almost universally accepted that Keynes' philosophy was correct. And in fact, nothing about it is correct. We should destroy all those Keynesian economic textbooks, and it should not be taught. I mean, if only as an example of things that were wrong. But it is unfortunate as to how intoxicating the ideology is, and it certainly makes sense to me why our politicians would embrace the teachings of Keynes, because Keynes just justifies what politicians want to do anyway, which is spend more money. Politicians want to get elected by promising that they're going to improve our lives by spending money. And Keynes basically validates that. It validates the role of government in trying to create growth or stimulate an economy. But the reality is the reverse. Government doesn't stimulate the economy, it sedates it. It gets in the way of growth, it doesn't create it. But Keynesianism makes good politics. It's like the equivalent of a fad diet where there's no exercise required. You just take a pill or rub some ointment on and magically the pounds go away. People want to accept that kind of pain-free, simplistic solution to a problem. If a politician promises to make everything better through spending money, cutting taxes, and running big deficits, I mean, that's a lot more palatable to the electorate than telling the truth and letting people know that there's not going to be any gain without any pain. And if you want to lose weight, these gimmicks aren't going to work. It's going to require a lot of diet. It's going to require exercise. People don't want to hear that. They want a simpler solution. But unfortunately, it doesn't work, and it's produced the crisis that we're in. So let's take a step back for the U.S. and figure out how we got into the depression that we're now in. And I believe we are in a depression. It's going to last for a long time. And the depression isn't here because of some failure of capitalism. If we had capitalism in America, there would be no depression. The reason that the depression is here and is going to stay here is because the government is in the way. The government is refusing to allow market forces to correct the problems in the U.S. economy that are the result of Keynesian monetary and fiscal stimulus. And because the government is going to keep repeating those mistakes, this depression is going to drag on and on and on, and it's going to keep getting worse because all of the policies that the government is using to stimulate the economy are stimulating the problems in the economy, and they're preventing those problems from being solved. See, in America, our problem is we borrow too much and we spend too much and we don't produce enough, we don't save enough. So you have these structural imbalances where we have this economy that really cannot function unless the world subsidizes it. The world has to supply us with the money to spend and the goods to buy. And all we can do is borrow indefinitely without any hope of ever paying anybody back. And so we have this phony economy that's upside down, that instead of being based on underconsumption, savings, investment, and production, is based on debt, and debt to finance consumption, whether it's from the government or from individuals. And that is non-productive debt, and it's debt that can never be repaid because we are not accumulating productive capacity with that debt. We're simply blowing it on imported goods, and then after we finish spending, we have to borrow more, but there's no way to pay it back. But if you want to go back and see how the government created this crisis, you can go back to the 1990s. Of course, you can actually go back further than that, but this has only got an hour. But in the 1990s, we had a stock market bubble. And why we had that bubble, I think it was the result of continued policies by the Greenspan Fed to stimulate the economy through cheap money. Every time there was a problem anywhere in the world, whether it was long-term capital management, the bankruptcy of Orange County, the Russia default, Asian contagion, Y2K, I mean, there was a number of different events you can remember from the 1990s. And every single time there was Alan Greenspan with more money, printing more money. And of course, all that fed the speculative mania on Wall Street, And when you combine that with the internet and the promise of the internet, and you have this toxic mix of innovation and cheap money, and it produced this bubble. And you had Alan Greenspan and the idea there was this Greenspan put. Everybody believed that Greenspan had their back, that the Fed would not let the market come down, that if anything went wrong, so there was the moral hazard, which resulted in a lot of crazy risk-taking that, absent that Greenspan put and absent all that cheap money, wouldn't have happened, because people would have been more concerned about losses had they been more fearful of losses. But under the influence of all that cheap money and Alan Greenspan's assurances, that fear went out the window and greed ran rapid on Wall Street. And we did a lot of very stupid things as a society in America in the 1990s. Now, Greenspan eventually took the punch bowl away. He raised interest rates, and the NASDAQ bubble burst. And that was kind of like a sobering moment where the stimulus high wears off, and you realize what an idiot you were. I mean, that's what happens when you get drunk. You drink alcohol, and you can do a lot of stupid things. And the following morning, how can I have done that? Well, you were drunk, and then you sober up. And so we did a lot of stupid things. We funded a lot of crazy internet companies that had no chance of ever making any money. Yet these companies were, brought public. They rented office space, they hired workers, they bought all kinds of equipment. Of course, none of it they could afford. And when we sobered up with all the, when the Fed, took away the cheap money, we realized we made all these mistakes. And then the bubble burst and the recession began, which is the healing process. The recession is where we acknowledge the mistakes and then try to atone for them, try to correct them. So these dot-com companies go bankrupt. Their labor and capital are now released and to be reallocated in a more efficient, more productive manner. But during that process, where asset prices are coming down and people are losing their jobs, that's a recession. And when George Bush inherited that recession from Bill Clinton, rather than laying the blame for the bust on Clinton, he simply tried to deal with the recession itself and tried to make it as shallow as possible. His whole goal was to fight the recession, even though the recession was the necessary cure for the problems that were in the economy. So instead of allowing this recession to do its work, what did we do? We said we need stimulus. We need to stop the recession. The stock market bubble has burst. People aren't spending now because their stock market wealth has evaporated. What are we going to do? How can we get people to spend more money? Even though they don't have it, what can we do to stop this recession? And they slashed interest rates down to 1%, which was really the lowest the Fed had ever brought them. We also had tax cuts, so we had both a fiscal stimulus by running a deficit and a monetary stimulus, and the result was the housing bubble. And this was not something that wasn't predictable. I started really writing about the housing bubble in 2004. I was worried about it in 2002 and 2003 when I saw what the Fed was doing. But it wasn't until 2004 that I realized that the enormity of the problem and the consequences when the bubble burst. And I started writing a lot of articles. I mean, you can go read them on my website at europac.net. But they're literally probably 20 or 30 articles that I wrote over a course of 2 or 3 years, really outlining the problems in the housing market, exactly how it was being inflated, all the factors that were behind it, and more importantly, that when that bubble burst, the severity of the drop in housing prices and what it was going to mean to our financial institutions, to our banks, to Freddie and Fannie. I pretty much laid out everything that was going to happen. Now, I didn't know for sure that the government was going to bail everybody out. I thought that was a potential. But I didn't know for sure. We could have done the right thing and not bailed people out, and it would have been an even bigger collapse than the one that we had. But I outlined what was going to happen as a result of this housing bubble. But in any event, and also if you want to watch a really good presentation, because we're not going to go over it all here, but if you go on the internet and you look up Peter Schiff Mortgage Bankers, you can look at an hour presentation I gave on the real estate market to 3,000 mortgage bankers in 2006. And basically I told them everything that was about to happen. Very few people believed me, but it's all there. And if you actually watch that, I have yet to see a better explanation of what happened, even by people who are doing it after the fact, than the one I did before the fact. And I gave that presentation in 2005 as well, so a year earlier. But anyway, so it was Keynesian stimulus monetary and fiscal, that caused the housing bubble. And again, the two biggest factors were the cheap money. By driving interest rates down to 1%, they brought mortgage rates down. And it was low mortgage rates that enabled people to pay more and more for houses, because people are buying houses based on the monthly payment. They don't really care about the price of the house. It's how much they're spending per month. And by bringing interest rates down, they were able to spend less. And of course, since nobody really believed that rates would stay down forever, right? The cheapest rates were these adjustable rate mortgages, because the adjustable rate mortgages were based on where Alan Greenspan had short-term rates. So you could get, even when fixed rate mortgages were 6%, you could get an adjustable rate mortgage at 2 or 3%. And so a lot of people who could afford the 6% were buying using an adjustable rate of 2 or 3%. And the government, through Freddie and Fannie, was guaranteeing those mortgages, even though the government knew that when interest rates rose, the person who was borrowing couldn't afford to pay. But nobody cared, because everybody just simply believed that real estate prices would always rise. So it really didn't matter if you can afford to make the payments for 2 or 3 years, because you would just sell for a profit, or you would refinance into some other loan that you could afford. But this was all made possible by Alan Greenspan. In addition, of course, you had the Freddie and Fannie guarantees. The private sector never would have made these loans if the government wasn't guaranteeing them. So that was a huge problem. And of course, the loans that the government didn't guarantee, which were the subprime loans, Freddie and Fannie was the single biggest buyer in the market. And so Freddie and Fannie was creating demand for the products that Wall Street was securitizing. And of course, the real demand also was coming from institutions all around the world who had huge dollars to recirculate from enormous trade deficits that were a direct consequence of the Fed's cheap money policy. So we were exporting all these dollars. Our trade deficit went to record highs during that period. I think we were having monthly deficits of over $70 billion. So we were flooding the world with our money. Alan Greenspan had interest rates at 1%, so our creditors were looking for a way to recycle those trade surpluses. After all, we didn't produce much, so they were looking for things to buy, and Wall Street created these mortgage products that, of course, the rating agencies put high ratings on, and so our creditors were gobbling them up. But all the demand was coming from all the money that we were flooding the world based on cheap credit. And at the time, I was challenging. If you look at that mortgage banker speech, I knew that these bonds that were being rated AAA were going to fail. I knew that they weren't even, I said they should be rated F. But all this was going on, and some people might blame, well, you can blame, capitalism because of the poor ratings, although the government the government is regulating these rating agencies, and the government is limiting competition among rating agencies. But even though the private sector did make some mistakes, just like they made mistakes during the stock market bubble, the question is why? What led so many rational people to make so many foolish decisions at the same time? George Bush, when he was president, he said that Wall Street got drunk. And I agree with him. I said, yeah, they were drunk. But the question was why? Where did they get all that alcohol? They got it from the Federal Reserve. And so you can't separate the monetary policy from the consequences, and you can't just blame Wall Street for doing stupid things under the influence of all that cheap money. If you took away that influence, if Alan Greenspan wasn't pouring the alcohol, everybody would have been sober, and we wouldn't have had this problem. But unfortunately, and one of the things I did forecast, even in my book Crash Proof, is I was afraid that when the real estate bubble burst and the recession ensued, which I believe would be the worst since the Great Depression, and that was an accurate forecast, my fear was that capitalism would take the blame. Because usually when government interferes with capitalism and creates a problem, it's always capitalism that gets the blame, not the government interference. And then that gives the government the ability to say, you see, we told you can't trust capitalism, we need even more regulations, and then the government uses that crisis as an opportunity to get even bigger and then do even more damage.